Hey, welcome, guys. It is Sunday night, September 7th, in preparation for Monday, September 8th trading day. One second here. Hey, are you going to be home for dinner or are you going out? Okay. All right. Thanks. Bye. Sorry about that, guys. All right. So the Monday, the 8th trading day, we'll jump into some of the analysis here in just a moment. But we'll continue on with Roy Longstreet's viewpoints of a commodity trader. Um, All right. A trip to Purdue. We journeyed to Purdue for the purpose of leading a discussion on commodity trading. The trip was truly eventful, but the discussion was more so. I have been stimulated to answer the questions put by one professor. Do people trade for purpose other than to make money? The answer, of course, is yes. There are those who are compulsive traders. There are others who find commodity trading a challenge. Commodity trading is a unique way of life. It can be slave or master. Commodity trading is a two-edged sword. It will provide the means to accomplish your dreams, or it will cut you to ribbons. Commodity trading is a stage, and the role you play in the drama of life is up to you. Commodity trading is a way of thinking through which you can reach higher than you have ever have before. Commodity trading is your right to be yourself, to fail, and try again. Commodity trading always gives you another chance. Commodity trading looks beyond the problems of today and to the promised lands of tomorrow. Commodity trading has its head above the clouds, but its feet are bedded in the solid rock of disciplined thought and action. Commodity trading takes big risks. It dares the moon flight. Commodity trading lives with hopes for the future. It may never realize them, but it keeps reaching. Mistakes are bound to be made, but try to avoid making the same one twice. Commodity trading is the art of using money to make money. Commodity trading is the art of paying the price for something you want. It is the art of regarding fear as the greatest sin and giving up as the greatest mistake. It is the art of regarding fear as the greatest sin and as giving up as the greatest mistake. It is the art of accepting failure as a step towards your victory. It is the art of seeking with the knowledge that you will find, knocking and knowing that doors will be opened unto you. Commodity trading is the art of being yourself. There are as many ways of trading as there are people. It is the art of being bold when courage is required. It is the art of using good judgment for which there is no substitute. It is the art of being prudent when caution is required. It is the art of being pliable. Bending with the wind is often the price of survival. It is the art of persevering in the face of adversity. It is the art of humility. It is always possible to learn from others. It is the art of recognizing the liar as the most dangerous person in the world, particularly the man who lies to himself. It is the art of sticking to fact, knowing that the greatest folly is substituting hope for fact. Commodity trading is the art of being a clever man, the one who does what he thinks is right. It is the art of using the most potent force in the world, positive thinking. It is the art of taking advantage of the greatest opportunities, which is the next one. It is the art of gaining the greatest victory, victory over yourself. It is the art of overcoming the greatest handicap, egotism, the most expensive indulgence, hate, and the most ridiculous trait, false pride. It is the art of knowing that the greatest loss is not money, but loss of self confidence, and that the greatest need is common sense. I highly recommend you guys go back, pause the video, read that, reread that for yourself, or re-listen to it. Either way, I think that's outstanding there. All right, the next one, the last one I think we're going to read today is the Hall of Mirrors. Our journey in the field of commodity trading takes most of us eventually to the Hall of Mirrors, so called because in it we can see only ourselves. Many traders are there today. They see only success. They think that they had something to do with the profits that they have made. Little do they realize that they may have been right for the wrong reasons. Very few will realize in time the danger that exists, that there is constant change, that their wish to now father, uh, their wish, I'm sorry, that there is constant change, that their wish is now father to their thoughts, that facts are being ignored and being replaced by hope and that arch enemy, greed. Little do they realize that most of the people who have made money in these markets will lose it during the next 100 days. This trip has been taken by most of the large traders as well as the small ones. It is not exclusive, it is not an exclusive affair. Joe Leader took it in the famous bull market in wheat in 1898. He had enormous profits in early May of that year. He lost it all and much more too when he decided to run his Comer into June. Comer, I'm not sure what that is. Maybe a rollover of the contract, possibly. What do we do about it? One of the greatest traders of my knowledge gave me his secret in these words. When I am long with a large profit, I get my car and I leave town. At each town I come to, I call back to the office and reduce my position. This man is still going strong in his 70s. Mr. William Danforth, founder of Ralston Purina Company, expressed it to me in these words. Have you taken a loss? Well, forget it quick. If you've taken a profit, forget it even quicker. Baron von Rothschild is reputed to have answered the question, to what do you attribute your success, with these words? I always took my profits too soon. When you find yourself in the hall of mirrors, where the air is closed and the company boring, break the mirror, make a window, and breathe fresh air. Get a new perspective so that you are free to think and act. All right. Good stuff there. We'll continue on with those chapters tomorrow night. All right. All right, so on the weekly here, the only thing I want to point out on the weekly is we've got a lot of these buy tails, a lot of, attempted push downs, push back up, push downs, push back up. Last week, a huge push down only to close back up, towards the end of the week there. So that's kind of interesting on a weekly basis here, looking in September. So this is 8/29. Well, here's not, this one ended on 9/5. So we're the first full week into September. And so far, we're mildly up on price from last week's close, or 2 weeks ago close. All right, on the 1440-minute chart. All right, the only thing I have here is, I'm sorry. So what I have here is this point up here, it's at 64, what is it? 65.43 zone. So 65.43 zone up here, just above Friday's high, which was 65.41. So I have that's, if we're above that, it continues the long bias on that if we continue above that. But I think I pointed this out last week. We could potentially be forming a little bit of a box range. We kind of come up here towards the top, down toward the bottom, test that bottom again here, move towards the top, slam down here, test the bottom again, and then move up. So the potential box. However, we did not eat into this tail. That was a pretty good tail that was left that one day. Instead of coming down the next day and eating into that tail, well, I guess we did a little bit. Just I don't know what the percentage of that would be. Doesn't even look like 50% of that tail, but we did eat into that a little bit, but nothing of significance. Instead, we continued on up, back up to the top of this box range. And not only that, but we proceeded to make new all-time highs. So I want to, acknowledge that yes, this may be a box range, but with this big tail left here and this new all-time high, we want to acknowledge that for potential continuation to the upside, as well as those buy tails on that weekly that looked like it was being left behind. All right, the 65,000 tick chart. I've got this here as a potential wedge like on the 65,000. So you can kind of see here, we've got a little bit of a potential wedge like action going here, down, up, down, up, down again, back up again. So that kind of corresponds with that box type idea. So right now, will we have you know further upside to go back up here and test these highs, or we come back down to the bottom of this? Right now on the 65,000 picture, what I'm showing is similar, and I'll show this on the 60-minute chart here as well in a minute. But I'm showing a potential, 1, 2, 3 up, and then potential further down as a potential. Again, if we're back up above the 65, well, 6543. No, that's up here. 6543 up here. So I have this 6500 as a zone I had marked out as a potential A, B, C. So we could move up into this zone here. I'll put that as a yellow dotted as a area overhead. And basically what that would be, guys, is it's kind of those equal moves off this one leg, two leg equal moves up. So that's what I kind of have as an idea for tomorrow. All right, so that's the 65,000. Let's go to the sixth. Oh no, I wanted to go to the gap chart first. So hang on. Okay, so this is on a gap chart. So you can see we filled these two upper gaps. We've got this other gap down here below that still has not been filled in yet. Right now on a 60-minute basis on the gap chart, all we've done with Friday's price action, yes, we made that new high and we flushed off. So I have some things that, like I said, I got tomorrow as a sell day on the 2-period rate of change. But you do have some indication here where slow line is up positive. All we've done is a pullback, like a flag like, and we're bouncing off this moving average here, the mid Keltner channel here. So all we've done is bounce off this mid Keltner channel, move for a potential move back up. We could get an ABC down, which would then support the little bit of a short thesis for tomorrow, or we could get that bounce here, which could support some of the other stuff that we're seeing. But 15-minute, so let's flip over to the 15-minute version of that. So on the 15-minute, you see we've kind of making this a little bit of a bullish divergence in the afternoon with this other bounce. So that could yield for a little bit of bullishness. Like I said, for an equal move up, A, B, C, I have it coming up in the 6,500 zone as potential still. If we fail that 6,500 zone and start moving back down, that could be interesting as well. The regular 60-minute, so that's where I wanted to bring over this regular 60-minute, so full-time hours here. Now the 60-minute, I'm showing a potential sell ante. So the sell ante is basically, we've pushed down here. We're going slow line negative. We had a thrust, so that kind of supports the ante play. Thrust down, the first move back up to the moving average, which this is the mid Keltner channel. So first move up to that, which currently that sits at 64.97. Ironically, that 6,500 is that equal swings up, ABC up. So that 6,500 could be a key turning point tomorrow. This sell ante is the slow lines going down. We kind of pull back up to the moving average after a thrust down for another move to either test or take out these prior lows. So that ante play would be a move back down to test or take out these lows. However, I want to be conscious of this. These horizontal teal lines, that is that 64, 63, 75 up to 64, 84 and a quarter. That is where we were hitting those positive 1,000 ticks back on the 22nd, when we pushed up here and started hitting those positive 1,000 ticks. So the fact that we've been above, below, above, below, and now we're back in here above it, we want to be cautious of that. So Again, just a lot of potential crosswinds tomorrow. I'm seeing some potential for both sides, and I just wanted to present the whole story of what I'm seeing. Like I said, I do have tomorrow as a sell day potential, with that pivot back above the 65.43, um, 65.43 zone. Internals, the on the internals, let's get that back over here. Okay, so we did do some pretty quick moves. We did a quick move up, quick move back down, and on the internal. So we're down 3 points off that high, which could be down 3 points down, and a greater probability of a buy. However, if you look from this back here on 8/22, which was that day we spiked up there, had those high ticks to where we are, where we were on Friday's high, we're actually getting a little bit of VIX divergence. Up in the VIX should yield down for the price. So we did get that VIX divergence on this daily picture. So that is yet another argument if you want to be short. So that divergence. So we'll see how that plays out. Um, that divergence could have already played out in these larger moves, but I want to be open to that. So let's trade safe. Let's try and help each other. If we see things forming on the 60-minute, on the larger time frames, let's not get caught up in the micro time frames. As much. Let's try and keep our eye on the bigger picture of things and where potential directional move for tomorrow could be. So, all right, guys, that's it. Sorry, it's a little bit longer. We will see you in the room tomorrow. Trade safe, happy trading, and we'll talk again soon.